This is Alan Bush with ADMIS. In the stock index futures, we are seeing some gains this morning. Most of this seems to be linked to news that China's exports increased 14.1% in December from the year-ago period. It was much better than the guess of up 5%. However, there are some headwinds developing in this market. For one thing, we are seeing longer-term interest rates starting to creep up. In fact, long-term rates now at an 8-month high. That has to be viewed as somewhat of a negative. Not to mention that we do have the debt ceiling crisis developing, likely to be addressed by Congress in mid-February. So these two issues are likely to limit gains in stock index futures, even though there seems to be some speculative buying this morning. Over in the foreign currencies, seeing the euro currency advancing after the European Central Bank refrained from lowering interest rates, as some analysts had anticipated, although even though there was basically a very slight chance that they could cut rates, there was that possibility. So the euro gaining, also seeing the British pound holding up relatively well after the Bank of England left their credit policies unchanged at their policy meeting today. Seeing the commodity currencies advancing, the Canadian dollar and the Australian dollar. This, of course, linked to China's export numbers coming in better than anticipated. From here, I would expect higher prices from the current lower levels for the U.S. dollar index. I also think that we'll probably see additional pressure in the yen this morning. Don't forget, the yen is very weak, approaching 2.5-year lows, and I think we'll see some new lows over the next week or so as the Bank of Japan continues to ease credit conditions. And in the credit markets, the longer-term chart for the 30-year Treasury bond, we are seeing a major uptrend line taken out. This suggests that the bull market is over for the credit futures market. Any gains are likely to be flight to quality gains, and I think if we do see this type of strength down the road, these are likely to be selling opportunities for the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.